Welcome once again. Welcome. This is Seewing Yi from the Yi Real Estate Network, and today I'm going to talk about how debts can make you rich. Debts, mortgage debts. All right. Before I go any further, at the end of the video, if you see value in this presentation, please smash the like button and also subscribe to my YouTube channel. And finally, subscribe to my email newsletter so you can receive free real estate newsletters on a weekly basis to enter into your email inbox so you can continue to be well informed and well educated to become not only a primary homeowner, but also as a real estate investor as well. So without further ado, I'm going to share my screen and I'm going to share something. Hopefully, it'll inspire you and resonate with you. So the first thing I'm going to say is, if you properly use your mortgage is your friend. Whether you use your mortgage to buy a primary home or whether you could use your mortgage to buy an investment home rental property, this is the first step, a stepping stone to achieve generational wealth. With that said, our 30-year fixed rate mortgage is the eighth wonder of the world. By the way, okay, in my lifetime, I have traveled to more than 50 countries. And, I have some casual conversation during my travels. And when I tell them that I own many 30-year fixed rate mortgages in the US, many rental properties, they say, what? I never heard of it. In our country, we don't have any 30-year fixed rate mortgages. We have like whatever. We have a 5-year term or adjustable rates. Many of our property that we buy in our country, we do buy with cash. So when a foreigner realize that we as a U.S. citizen owns 30-year fixed rate mortgages, it just boggles their mind. We just never had it so good. So yeah, we've been spoiled for all the years, all the decades. We take it for granted. So living in America, this is an American dream because you're able to buy the most people's wealth is through home ownership, right? So buy, invest, buy houses, leverage through a mortgage, buy rental properties, leverage through mortgages, and invest over time, long term, and you're going to be fine. So this is history. The history for those people that do not learn history will doom to repeat the past. All right. So our 30-year fixed rate mortgage is the eighth wonder of the world. It's the greatest invention in the history of wealth building. It's the greatest invention since apple pie, Chevrolet, sliced cheese. I don't care how you slice it. If used properly, it will change the trajectory of one's financial future. Also, a fixed rate mortgage is an inflation-induced debt destruction. Some of you are thinking, what does this mean? I'm not going to go over that, maybe on another video, but try to digest that for a moment. When you get into this good debt multiple times, you and your family and your legacy will be changed forever, generationally. All right, speaking of that, look at this. Real estate, housing market is supply and demand. Okay, if the demand exceeds supply, home prices will rise. Right now, yeah, demand has subsided, at least temporarily, due to the higher interest rate, and the supply is still very, very low. Nationwide, according to Redfin, we are around 3.3% monthly supply of homes. This is a very, very low. It's almost a record low historically in terms of availability of homes to buy. Okay, just let that sink in for a moment. With that said, look at this chart. US home equity surges to $27 trillion. trillions with a T tango, as the value of the housing stock passes 39 trillion. This is eye-opening, absolutely. So the title of this video is eye-opening, the generational wealth that can achieve through home ownership. Okay, so don't listen to all those YouTubers out here just giving you all this doom and gloom. The world is coming to an end around the housing market. We could have a crash. All this negative headline, all this fear porn for the sake of clickbait. I don't play that game. I don't play the clickbait game. For those of you who've been with me on my YouTube channel, you know that. Okay, I will only give you data, trends, and my years of experience of doing real estate investing for the past 30 years. Yes, I've been investing in real estate for the past 30 years, longer than 99.9% of all the real estate YouTubers out there. Okay, not to brag, but perhaps this comes out of confidence, experience, track record, the whole 9 yards. All right, right now, sellers are locked in. 9 out of the 10 mortgages have an interest rate below 5%. More than 40% of all the homeowners don't even have a mortgage. Therefore, sellers are locked in. They're not selling their home because the interest rate, the mortgage rate is around in the mid 6%. They're not going to sell. And the demand is not that high right now due to the higher interest rate. So there are lack of buyers and there are lack of sellers. But ultimately, I believe the buyers' demand will accelerate once the mortgage rate, if and when they are reduced from the current mortgage rate to around 5.5% to 6%. I believe we'll see a lot of activities going on sometime in 2023. Okay, second quarter, third quarter, who knows? Okay, so again, you look at the homeowners equity. The homeowners equity on a green color have far exceeded the mortgage debt, underlying debt. So when people buy a home long term, they use a fixed rate mortgage, which is which is a hedge against inflation, because your mortgage payment does not increase at all for the next 30 years, while the purchasing power and inflation decreases our purchasing power and cost of items goes up. Your mortgage rate always stays the same, which is absolutely amazing. For those of you that own home mortgages, look at those people that own mortgages, and mortgages are collateralized by an asset. What are those assets? The asset is your house, is your primary home, is your investment property. All right. So over time, long term, 10 years or more, your asset, your house will increase in value. That is history. You must understand past history. History will repeat itself. Do not have this tunnel short-term vision. Look at the breakdown of people, the type of interest rate they have currently on homeowners. For those homeowners that own their home for more than 2, 3, 4 years, and 10 years, 15 years, and 30 years, look at the breakdown. 1.5 million of homeowners have mortgages, 30-year fixed rate mortgages of 5.5% or lower. 3.6 million households own mortgages at 5% or lower. Almost 6 million homeowners own 30-year fixed rate mortgages of 4.5% or lower. Almost 10 million people own mortgages lower than 4%. This is mind-boggling. Over 11 million people own mortgages of less than 3.5%. And let me see what else. Oops. And over 13 million people own mortgages of less than 3%, and 4.7 million people own 30-year fixed rate mortgages of less than 2.5%. And 250,000 people own 30-year fixed rate mortgage of less than 2%. These people can hold on to the asset collateralized by the mortgages because, again, their payments are fixed. Is inflation a hedge? Is right? So that's why people are holding to their houses. They have very little motivation to sell their homes, and they can easily pay the mortgages. The longer they own a home, as they pay down their mortgages, they just sit tight, just live at a home forever, and create generational wealth for themselves and to pass on down to their next generation. All right, so now I'm going to segue for a real estate investor. Buying an investment property, buying an income property, using the power, the leverage of mortgages, 30-year fixed rate mortgage, over time will make you very, very wealthy. All right. So the key is, if you want to become a real estate investor, it's very easy to do it. All you have to do is find a investment property and find investment property that will give you that you can rent it out to a renter, to a tenant, and get a 30-year fixed rate mortgage. And as long as you crunch the numbers, you buy in a good market, you do your research, you do your due diligence, and all that, and still achieve cash flow, you are going to win in the game of real estate investing. So let me give you a real life example of this property. You are analyzing a property for $84,000. It's a single family home rental property in the Midwest market, Buffalo, if you will. So you get a 30-year fixed rate mortgage at 25% down payment, at even a 7.5% interest rate. Okay, even 7.5% interest rate. I mean, interest rate could be for investment property, could be anywhere from 6 to 7.5%, depending on whether you want to pay the points. You pay 3 points. You can lower your rate. You can do a rate buy down. There are many flexibility around the type of loan programs available that can allow you to achieve 6% to 7.5% 30-year fixed rate mortgage. So each individual situation is different. Consult your loan advisor. But with that said, I'm using the worst case scenario, 7.5% interest rate. Look at the numbers. So you put 25% down payment, which is a total of $26,000. Your projected rent per month is $1,200. The renter can pay you $1,200. You minus your monthly debts, your vacancy factor, you minus your 3% vacancy factor, 10% property management, maintenance and upkeep out of your pocket at 5% per year from the rent, and then your monthly taxes, property taxes, insurance, and the whole 9 yards. And then your mortgage, you're going to get a mortgage of $63,000, even at a 7.5%. Your mortgage payment is $441 per month. Wait, I got that wrong. Do you have to pay this mortgage, this $441? Yes or no? Okay, that's sort of a trick question. The right answer is you are going to outsource this mortgage to a person by the name of a tenant. Tenant, the renter, by paying you $1,200 per month, and you crunch the numbers, minus your monthly mortgage of $441, minus your monthly taxes, insurance, property management fee. At the end of the day, you still have almost $400 monthly net cash flow on a month-to-month basis, only in the first year. And second, third, fourth, fifth year, you can increase your rent based on the inflation-adjusted rental increases. The renter gonna pay down your 30-year fixed rate mortgage systematically. That's inflation-induced debt destruction. That's the meaning of that. Your tenant gonna help you pay off your loan. Your tenant gonna pay off all your monthly expenses. And at the end of the day, your tenant gonna make you rich, and you're getting cash flow monthly and annually, plus 3 to 5% annual appreciation, plus debt pay down, plus tax benefit, the whole 9 yards. There are 5 ways to help you, 5 ways to so your income property you're buying as a potential investor is a multi-dimensional real estate asset class, the most favorable tax advantage, the most lucrative type of investment asset class in the history of the world, income property. Why? Because your only risk initially on your first rental property you purchase is the down payment. That's it. After that, you're going to recoup your down payment in a few years through the combination of annual rent you can collect and the consistent annual appreciation you're going to achieve. Or I know at some years you may not get any appreciation as it potentially happened this year. Perhaps, I don't know. We're going through a mild recession, perhaps a slight downturn of the home prices. But this is short term. Okay, long term, you stay the course. Let the renter pay down all your debt, including your mortgages. The power of 30-year fixed rate mortgage. So anyway, so the takeaway is this. In your past, perhaps you were told that debt is bad, right? Yeah, debt is bad. Consumer debt is bad, obviously, because credit cards are bad, student loans are bad, whatever. But the mortgage debt, even if you're as a primary homeowner, you still have a 30-year fixed rate mortgage. As long as you have a job, you have a salary that can pay off your primary home mortgages on a systematic basis, eventually you can pay off your 30-year fixed rate loan. Eventually, your house is gonna begin to appreciate. This downturn, short-term, hopefully, correction that we're having right now, it'll blow over. And over time, if you hold your property 7 to 10 years, if you can afford it, if you have a good cash reserve, if you manage your budget correctly, your mortgage will be paid down. As a primary homeowner, as an investor, as I already told you, it's even better because your tenant gonna make you rich, as I told you. All right, so I think that's all I have to say. I'm trying to give you a simplistic explanation and a layman can understand. This is not rocket science. Anybody can do it as long as you have the commitment and the discipline and the dedication to make a house your long-term goal. Long-term, ride out the storm. Okay, show the discipline. Right. So hopefully we see a lot of value from this short presentation. And if you receive a lot of value from this video, please smash the like button and also subscribe to my YouTube channel. And finally, to subscribe to my email newsletter at the bottom, yerealestateenetwork.com. So you receive free email newsletters that you learn about real estate investing in all aspects of it. All right, thank you so much. This is Seewing Yi, and I will see you on the next video. Have a nice day. Bye-bye.